Welcome to this online presentation from Origin Financial. My name is Simon Williams and I head up the business development for the charity team at Origin. In today's presentation, I'll be looking at 4 areas we think you should review to help your charity stay ahead during 2013. The 4 areas I'll be looking at includes cash management and how we can identify if there's any improvements you can make. I'll be looking at reviewing your charity's investment policy statement to ensure that your longer term investments are managed appropriately. I'll take a brief look at contingency planning, specifically explaining how you can protect your charity from the unforeseen loss of key staff. And lastly, I want to provide you with an overview of the new workplace pensions legislation that has recently come into force. So, first of all, let's start by looking at what challenges charities are currently facing when trying to get the most from their cash investments. As some of you may have noticed, interest rates offered to investors on short-term products have been cut dramatically in the last 3 months. This is partly as a side effect from the Funding for Lending scheme that was introduced in August of last year. The scheme was set up to enable banks and building societies to borrow money directly from the Bank of England at very favourable interest rates for the purpose of mortgage lending and funding for business finance. Now, whilst this scheme may have helped home buyers and business owners secure finance more easily, what it has meant is that banks and building societies have become less dependent on attracting money from savings and deposit accounts, and as a result we have seen interest rates fall over the last few months. So, what does this mean for charities who need to hold money on short-term deposit? Well, from our point of view, we believe that it's more important than ever for charity investors to shop around and get independent advice on how to maximise the returns on their cash investments. Key to this process is understanding your charity's cash flow or liquidity requirements, as this will help you identify how much money can be invested and for how long it can be invested for. Generally speaking, the longer you can tie up money for, the better chances you get of securing a higher return. So once you've created a cash or management strategy around your liquidity requirements, we would suggest the next step is to check if your charity's overall investment policy statement covers cash investments. Some charities will choose to restrict where money can be invested and also how long they can invest for, or the limit the size of investments with certain providers or certain types of account. If your policy doesn't cover cash investments, this may be something you might consider when reviewing your investment policy in the future, as obviously these guidelines can help anybody who's responsible for making decisions in this area. If your organisation has a number of cash investments with different providers, it may be beneficial for you to explore the use or possibility of holding your accounts within an investment platform. Developments in technology over the last few years have seen a number of providers launch online investment platforms which offer investors the ability to manage and view all of their accounts in one system. In addition to being able to view balances of all your accounts in one place, some platforms also enable you to cut down on the amount of administration time required when opening new accounts or reinvesting money from maturing accounts. This is because new accounts are opened via the platform, and as such you are usually only required to supply personal identification of your signatories and trustees once when opening the platform. And as long as there's no changes to your signatories or trustees, there's usually no requirement to supply further identification when making applications to providers for new deposit accounts. Lastly, on this topic, what I would like to say is don't rely on your current account provider to offer you the best commercial terms on your savings or deposit accounts. Always shop around and compare rates before making any decisions. If restrictions on your time make this difficult to do internally, please speak to us as we can help you and advise you in this area. Next, I'd like to look at your charity's investment policy statement. When considering the process you follow to manage your longer-term investments, it's prudent to review the contents of your investment policy statement on an annual basis to ensure it's aligned to your current aims, views and goals. It's important to remember that your investment policy statement acts as a brief and provides guidelines for your investment manager or your investment committee. Typically, the areas to consider may include looking at whether the goals or targets are still appropriate. If these goals and targets are linked to a benchmark, is the benchmark still appropriate? Or are there alternative methods to monitor the performance that offers a better fit? Is the exposure to investment risk appropriate, and is the asset allocation in line with this, or are there areas where potentially you might be under or overweight? You could look at your ethical criteria and assess whether this is still appropriate, or if you don't use any ethical criteria currently, maybe this is something you could consider for inclusion in your investment policy statement. You could consider whether your chosen investment approach is still appropriate, or are there any other options or opportunities to reduce risk or smooth returns by adopting a different investment style or different investment approach. If you need assistance in this area, Origin provides independent advice, and we can help step you through a review process where we can look at each of these areas in turn and discuss this with your investment committee or your trustees. Moving on, the third area we believe many charities could improve their position is by reviewing their contingency planning, specifically protecting against the unforeseen loss of key staff. Every charity has key people who are driving it forward, from fundraising staff to researchers to project managers and executives. And the unexpected or sudden loss of key staff can have a devastating impact on your charity's finances. The Charity Commission suggests it's best practice to maintain a risk register within your charity that identifies your key risks and what actions you will take to mitigate or minimise those risks. As such, many charities will recognise the need to insure their property, equipment and other fixed assets. However, there can be a danger in overlooking your most important assets, who are the people who are driving your charity forward and who are responsible for ensuring the continued success of your organisation. Many charities we talk to are unaware that insurance is available as an option to protect against such a loss. Key person insurance is designed to compensate your charity or not-for-profit organisation for the financial loss brought about by the death or critical illness of a key member of staff. It can provide a valuable cash injection to aid a potential loss of revenue, including fundraising or project-related income, and it can provide funds to meet the costs of replacement, recruitment and training of new key personnel. This type of insurance is fairly inexpensive in comparison to the cover offered. For example, to protect against the loss of £500,000 worth of fundraising income on the unexpected death of a fundraising manager age 40 for the next 5 years, currently this would cost roughly around about £30 a month. To help you conduct a review within this area of your finances, Origin are able to offer you assistance. We can help you identify which key staff you should provide protections for, and we can also help you calculate the amount of cover that you would apply for insurance for. To arrange a consultation, please call us and speak to one of our advisors and see the contact details on the last slide of this presentation. The last area I want to look at today is the recent changes to workplace pension legislation. New legislation came into force in October 2012, placing new obligations on employers, which includes charities and non-profit organisations. As these changes are fairly complex and there's a lot of information to take in, I'll only be covering some of the bullet points and key points that you should be aware of. and I'd urge you to view the in-depth information on this topic which is available on our website. So, what are the key points to be aware of? Well, any UK employer who employs at least one person will be legally obliged for the following bullet points, which are to set up and register a pension scheme suitable for automatic enrolment, automatically enrol certain workers known as eligible job holders into that pension scheme, arrange membership of a pension scheme for certain other workers, make contributions for eligible job holders and also certain other workers, manage the automatic enrolment, joining and also opt-out processes, provide specific information to workers, pension scheme providers and the pensions regulator, and keep records as to how you have fulfilled your duties within these areas. These requirements will be phasing between now and 2016 depending on the size of your organisation. Obviously this is potentially very time consuming and you'll be required to comply with this, as doing nothing is not going to be an option. There will be severe penalties for employers that do not comply. So therefore, if you don't already know when your staging date is, we'd urge you to find this out, and obviously planning early will help you understand how you're going to meet your additional costs in this area. Again, Origin can provide you with help in this area and can assist you in stepping through a process to consider how you're going to implement the requirements that you're placed upon. As an independent firm, we can advise your charity on which schemes will be most suitable. Therefore, if you want to discuss this, I'd urge you to contact us today and speak to one of our pensions advisors. This concludes my presentation for today. I hope you found this information useful. Again, I'd urge you to contact us and speak to us if you need advice in any of the areas discussed. Contact details should be seen on your screen now. We have a free phone number which is 0800 0858 858. You can phone that number and speak to our advisors in the relevant areas. Alternatively, there's information available on our website, and if you want to look at other webinars or presentations, you can follow www.origin.eu.com/webinars. Thank you for your interest in Origin, and goodbye.